around. Fake shares 101. There was a company, two of them actually, that you guys may have heard of called FTX, and the other one of them called Bittrex. And well, let's just say that previously they created tokenized securities, aka shares of stock backed by nothing. This occurred January 28th, 2021, the same day that the buy button was pulled on AMC, Gamestop, SLV, COS, and dozen plus other securities. The same day that many institutions like Robinhood, Webull, Interactive Brokerages, TD Ameritrade took away your ability to buy shares of stock. So Bittrex, as you can see here, created these on January 28th, as did FTX, for GameStop, AMC, and a plethora of other securities in which they lacked liquidity. And upon their collapse, it was proven that neither one of them actually had what they claimed. As you can see here, Bittrex came out with a statement on November 13th of 2022 and said, "We suspend the trading of these products immediately as the news of FTX and Alameda's difficulties hit last week in order to protect our customers. We have decided to shut down this product completely," because they never had the shares to begin with. They said that they would reimburse all users a full value of their tokens holdings and work with regulators and lawyers to retrieve the value of stocks from FTX Alameda. And we know that this is still ongoing and this has not happened because FTX did not properly have these securities. I showed you guys their balance sheet before, and I'll show it to you once again. This was the FTX balance sheet here that we received. I'll switch them up for you guys, put it over here. That we received from Financial Times and was reported on many different medias here. So the FTX balance sheet showed that they had a variety of liquid and illiquid stocks, everything from Robinhood all the way down to their scam coin called FTT, and even Twitter stock when it was still trading. But they did not have any AMC or GameStop to back their securities, their tokens. Hey, they initially they borrowed some of these AMC and GameStop stock to create the tokens, minted them on the blockchain, and then they were never to be seen again because they were returned, so they were no longer being borrowed. And a company called Bakkt now is doing the exact same thing that FTX and Bittrex did. They're creating tokenized assets that are only backed by the exchange. As Ape Average here said, it's literally a digital derivative. And they added support for these tokenized stocks that were delisted from Robinhood and other platforms on January 28th, 2021, because they needed fake share locates. This is something that is happening at this very moment today. So as you guys can see here, they had billions of tokenized shares backed by nothing, proven by their balance sheets when they became insolvent, both Bittrex and FTX. This legally allows broker-dealers to use the tokenized securities to lend out non-existent shares to short sellers. So these markets here are literally rigged against retail. Excuse me one second. This new company, Bakkt, is creating more of these, as you guys can see here, from MicroStrategy to GameStop. Could you imagine why they need this liquidity? I think it's pretty clear, and we're going to go over that right now. The fact of the matter is that they're using these to create fake shares. 99% of Bact's balance sheet is borrowed shares. You can see here their own securities. They've got $73,000 worth of their own shares and $40,524,158.24 of third-party securities. Those securities that they are borrowing. Those are a liability. Those are third-party securities that they are borrowing from other brokerages, and they must be paid back. So they don't own Gamestop shares for which they're creating synthetics and these tokenized securities. They're just borrowing them temporarily. Americans can't even buy these. Why would that be? Because this prevents the Securities Exchange Commission from suing them for operating an unregistered exchange like FTX and Bittrex. They can only be purchased by non-American investors outside of the United States. But the reality of the matter is that nobody is going to buy that shit. Right? Here they are right here, proudly touting on Twitter just a few days ago. There are 5 new tokenized stocks: Microsoft, MicroStrategy, Tesla, Google, and GameStop. These can only be purchased by non-US investors, and they exist for the sole purpose of providing fake share locates to other over-leveraged broker-dealers who want to lend them to their short hedge fund borrowers. Now, how is this possible? These are legal loopholes, my friends. A market maker's best friend. It's all legal and it's very simple. So we have a broker-dealer, like, for example, Robinhood, which needs to lend shares to a short hedge fund, like Archegos. And there are no shares available to borrow because many retail investors have DRS'd their shares of GameStop, and the rest are diamond-handing, holding their shares tight. Voila. Enter BactFi, as you can see here. They have tokenized securities. They borrowed shares here, you can see, to the tune of $40.5 million worth, which is in all of their securities with the exception of $73,000 worth, in order to create these tokens on the blockchain. Now, they can return the borrowed shares, but those tokenized securities remain on the blockchain backed by nothing. A short hedge fund, Archegos, needs to borrow these shares from Robinhood in order to cover some of their short positions. But let's say Robinhood has 0 available shares. So Robinhood goes to BactFi in order to locate the shares to lend to their short hedge fund, Archegos. Robinhood now has something called, quote, plausible deniability to the tokenized shares that they're borrowing. So you see, on Wall Street, just believing that these shares are real absolves Robinhood of breaking the law. And this is not speculation of any sort. This is actually in share lending regulations passed by the SEC, the CFTC, and FINRA. Honestly, Google it if you'd like more details because it's very easy to see and clear. So now the borrow fee of these shares is much, much lower, and Archegos can get the shares from Robinhood, who can get the shares from Bact, who is no longer borrowing these GameStop shares, or the shares were recalled from whoever they were initially borrowing them from in the first place when they took the screenshot of their balance sheet to provide to the Commodities Futures Trading Commissions. These are liabilities and the exact same thing that was done by FTX and Bittrex, both of which are now insolvent and were sued by the Securities Exchange Commission for this. So all of a sudden, you now have 5 synthetic shares of GameStop created from one single original share that is held by a retail investor that had share lending profit sharing enabled on their, for example, Charles Schwab account. Alternatively, this retailer held GameStop in a margin account, which does not allow you to turn off share lending. So this, ladies and gentlemen, is how you can dilute a stock by 500% of the entire existing float of shares with one simple and legal trick. And this happens time and time again. And it is happening right now with BactFi because they lack liquidity in GameStop. Most people don't know that this is happening. And a lot of people don't care that this is happening or don't understand why this is a bad thing. But it will eventually reach out and negatively affect them in other securities. As you can see, they're rolling out other securities to the point which they're going to scream and shout, "Why didn't anybody tell me?" when they are negatively affected and lose a ton of money or get margin called or even worse. So that is the reality of these self-regulating entities. Ladies and gentlemen, that is the very definition of the word rehypothecations. If you're not aware of what rehypothecations are, this is rehypothecations. This is taking one security and borrowing it over and over and over again from a retail investor to a bank, to a broker-dealer, to an unregistered broker-dealer, to a short hedge fund, to a family office, over and over again, right? Daniel brings up a great point that hedge funds like Citadel, for example, have foreign branches outside of the United States, and they can buy them and then transfer them to their U.S. accounts that are short Gamestop, use them as share locates in order to prevent their cost to borrow from going astronomically high. And this is absolutely true. As you can see here, crypto exchange Bittrex filed for bankruptcy less than a month after the Securities Exchange Commission charged it with operating an unregistered exchange. They were sued by the SEC for operating an unregistered exchange, brokerage, and clearing agency. Bittrex is most well known for issuing these tokenized securities without actually holding the underlying asset, which is used as fake share locates against heavily shorted stock like AMC, Gamestop, and others. And we know here from proof, from data received from Robinhood and others, that they clearly on January 27th and 28th were in discussions on pulling the buy button and making stocks like GameStop and AMC position close only. The chief operating officer, Gretchen Howard, said, "Just an FYI, Dan and I from Robinhood are joining Jim at 5 p.m. on a call with Citadel. They reached out and wanted to speak this evening, and we believe they will make some demands on limiting payment for order flow across the board. We won't agree to anything, but wanted to give you a heads up." And of course, Vlad Tenev, the founder of Robinhood, said, "Okay, maybe this would be a good time for me to chat with Ken Griffin. You guys can mention that." And a redaction here said that anecdotal evidence said that very large firms are having really bad nights too on Wall Street. And the president, Jim Swartwout, said, "Everyone is. You wouldn't believe the conversation that we had with Citadel. It was a total mess." These guys have all had these discussions before. This has happened more than once, not twice, but on a multitude of occasions. And this will continue to happen. That's why today, when companies like AMC announced a restructuring of their debt, well, it was halted for over 55 minutes. It was halted for actually an hour and 1 minute, as AMC announced they were restructuring $1.6 billion of debt due in 2026, all the way out to 2029 and 2030, potentially saving nearly $500 million in bond payments due from AMC. Over $464 million are potentially being saved here on AMC in exchange for some stock in the future. AMC is going to move 180 or so of their U.S. theaters to a new unit of the company, making it unreachable from creditors, potentially destroying many short sellers' positions. And they have also arranged for a repurchase of up to $850 million in additional loans due in 2026 in exchange for new loans due in 2029. That is why AMC today was halted on a T1 halt, as you can see here, for over a period of 1 hour and 1 minute on the NASDAQ through the NASDAQ trading halt search. You can see it at NASDAQtrader.com that it was halted from 1340 to 1441 Eastern Time, originally on a T1 halt that was transferred from a pending the release of material news halt to a T3, which was the news and resumption times, which states this news has been fully disseminated through a Regulation FD compliant method, or the NASDAQ has determined that system misuse or malfunction that caused extraordinary activity will no longer have a material effect on the markets, and the security or the misuse or malfunction is not the cause of the extraordinary market activity. So basically, they believed that there was extraordinary activity in the market because retail and short hedge funds were buying up the stock in order to cover some of their positions, the short hedge funds specifically. And they put in a T3 halt once they realized that this was no longer the case, that they were not actually being misused, but that the stock was actually being repurchased for the purposes of over 200,000 shares that were originally short to be returned. This means that short hedge funds were closing out, at the very least covering a small portion of their positions. At least some of the smart ones were. And that's what we see here. Originally a T1 halt being transitioned to a T3 halt on the same day. You can see here Adam Aaron stated, "We successfully refinanced $1.6 billion of debt with a plan of up to $850 million more, was due to be repaid starting in 21 months. Now maturity dates extend to 2029 and 2030. We get years of added breathing room to build, grow, and strengthen AMC. This debt extension to 2029 is a huge vote of confidence in AMC's future by our lenders. Plus, it's possible to reduce our debt owed by up to $450 million as well. It took all of our skill, ingenuity, and tenacity to get this accomplished." And then here you've got the official press release from AMC Theaters in greater detail. And you can see here that they have announced the possibility of exchangeable notes to some of these creditors so that AMC doesn't have to come out of pocket $450 million. But as the stock price rises in the future, these creditors can basically use these exchangeable notes to exchange them for stock in the company, thus reducing the total amount of dilution required in the overall long term. So all of this points to very positive news for AMC stock and the company, and very bad news for these short hedge funds, market makers, family offices, etc. Their only option, as there is insufficient liquidity on a majority of these stocks, is to create fake shares. Fake shares through the use of tokenized securities. This is very much the exact same thing that happened with FTX, as we have told you guys here. The crypto exchange is the only one that is backing these securities. And as you can see here, we told Backed clearly, we can see your balance sheet. It clearly holds 99% borrowed securities. You've created synthetic shares of Gamestop here by way of tokenization, and that's what led to the collapse of FTX and Bittrex. It's only a matter of time until you're also sued by the SEC, if not the Commodities Futures Trading Commissions, who oversees offshore trading outside of the United States, then become insolvent as well. It took about a year and a half for that to happen to Bittrex and FTX from the date in which they originally created their tokenized securities. But it's very clear here that when you look at their cash and cash equivalents, 338,000, 73,000 in their own securities, and 40,500 of third-party borrowed securities, that at some point, these will have to be returned. Whether it happened already, whether it's going to happen in the future, when these shares get recalled by whoever is borrowing them out or lending them out to Backed, Backed will then have over $40 million in current pricing of third-party securities, and a portion of those that will have to be repurchased at market value. You guys have recently saw Gamestop go from $10 to $80 a share. You guys recently saw AMC go from $2 to $11 a share. If that were to happen to Bakkt, and these, let's just say, for example, $5 million worth of GameStop is recalled by the share lender, and the stock price goes from, say, the current stock price of around $25 a share of GameStop up to $100 a share of GameStop. We already watched it go from 10 to 80 just about a month and a half or two ago. Bakkt would have to buy those. And if they did not, then they would be naked, which is a very good possibility as well. Bakkt would continue to lend those shares out to companies like, say, Robinhood. And then when Robinhood would have to return those or repurchase those shares because they find out that Bakkt is holding them naked, they would be both have to repurchase those shares at market value from other people, diamond-handed retail investors, DRS shares that are not for sale, and so on and so forth. So there is a massive amount of liability here on the balance sheet of Bakkt to the tune of over 99% of their assets because they're all being borrowed. And if and when these shares are recalled by whoever is lending them out, whether it be retail investors that are holding them in a margin account, and they then sell their shares, they will be taken away from Bakkt, taken away from Charles Schwab or whatever other brokerage is currently holding them, and taken away from Robinhood or whatever brokerage is lending those shares out, taken away from the short hedge fund that is borrowing those shares as well. And now you've got 5 times as many shares of GameStop than you previously did, than should exist, that need to be repurchased and returned on the open market. That, ladies and gentlemen, are the pros and cons of holding synthetic shares. That is the way that synthetic shares are created, and that is the way that synthetic shares are taken out of the market. And the consolidated audit trail is going to be fully effective at the end of July of this year. And when that occurs, there will be able to, the Securities Exchange Commission will be able to fully track shares and rehypothecations in which this occurs. They will then be able to see and crack down directly on a lot of these firms. I have it on the other screen here. So as you can see here, FINRA is reminding all members, regardless of size, that receive or originate orders in NMS stocks, OTC equity securities, or listed options, that they will be required to report to CAT. And here we had a CAT update just 4 days ago, and we saw some incredibly massive numbers in the billions and billions of dollars. Billions and billions of shares, and billions, if not hundreds of billions of dollars. Let's take a look at that, since I know you guys are interested in seeing more about the CAT data. So here's the July 18th CAT update. Consolidated audit trail. The tracking of these shares. The CAT system has been fully implemented, Daniel, but the reporting requirements become in effect at the end of July, at the end of this month. This is a large file, so let me close out some of these background tabs. Free up some of the RAM since I do have about 100 tabs open. Here we have the release data. from a vast number of these. And this shows errors. I'm talking millions, hundreds of millions, and billions of share and options errors that occur every single day. These are naked shorts, failures to deliver, rehypothecations like the ones that I just told you about, synthetic shares, fake shares. It's at the bottom. I'm waiting for the last 8 pages to load because those are the ones that have the data. But it is a fairly lengthy document. Here we go. It says, hey boss, what's the word with Lit? Lit Exchange, we plan to launch our Founders program for our upcoming broker-dealer here later this week. Be on the lookout for that. Here we go. Equities. From June 14th through June 27th. Let me make this as large as I can on my screen. Well, let me zoom in. Let's see. There you go. Let's start here. There's 4 pages of this, and here we have June 14th through June 27th. What do we have here? On June 20th alone, there was 51.8 million overall errors. On June 17th, 68.4 million overall errors. Massive, massive amounts of numbers here. From June 28th through July 11th, 66 million errors on the 1st of July. Tens of millions more every other day. Now let's look at options. 1,157,000. 1,157,198 options errors on June 24th alone. Multiply that by the 100 shares of the underlying option, because every call contract or put contract is indicative of a minimum of 100 shares. Some contracts are indicative of over 100, more than 100 of the underlying asset. You can see that is 115 million shares worth of errors in these options contracts alone. Here on June 26th, there was 1,448,000, so even more. That would be 144 million shares worth of errors in options on June 26th alone. Take a look here. Further options. July 8th. There was 1.7 million late. That's 179 million late reporting. And even still, even though 179 million were reported late to the Securities Exchange Commission for the Consolidated Audit Trail, that's 2,438,000 options that had errors of this sort. That is indicative of over 243 million shares worth of errors, rehypothecations, naked shorts, synthetic shares, and so on and so on and so on, just in one single day. And this is what is finally coming to fruition here with the Securities Exchange Commission. They are going to be finally able to use this data to send it to the Department of Justice, to have the Department of Justice not only do a civil case like the SEC does, but to actually do criminal cases against the people and the manipulators of these sorts of stocks and firms, of these sort of stocks and equities, options, derivatives, etc. It's the reasons like this and what you guys are seeing with Bittrex, FTX, Bakkt, etc., and the CAT system that we are creating Lit Exchange. We've been working on it since September of 2021, and it is a fintech company that we are creating. It is an upcoming stock brokerage firm to empower retail traders in a brand new way with the use of artificial intelligence, swarm intelligence, and by routing orders to lit markets in order to avoid dark pools and prevent stock market manipulation that occurs from payment for order flow. You guys can go to litexchange.com or litexchange.app with no E at the beginning of exchange to sign up. And you can input your email here. This is the last chance that people will be able to sign up without an invitation. So in the coming weeks, we will only be allowing people, in the coming months and years, we will only be allowing new users to sign up for Lit Exchange through invitation only. So in the same way that when Gmail first came out, you needed an invitation to get a Gmail account, or when Facebook first came out, you needed an invitation to open up a Facebook account, we will not be letting people sign up for it at their will. We will only be allowing other verified users, such as yourself, to send out invitations to new users to sign up. So that being the case, I wish you peace and wealth, my friends.
I want to be clear, I do not respect the SEC.
Let's see what good old Elon has to say here.
To limit the buying of about 13 securities on our platform.
And as you guys know, he does
really
not respect the Securities Exchange Commission.
In order to protect the firm, we had to limit buying.
That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, we're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued.
Sam Bankman-Fried and FTX, he's been charged by U.S. courts and the SEC with money laundering, conspiracy to commit wire fraud, and securities fraud for the collapse of FTX. The former chairman of NASDAQ, Bernie Madoff, built the largest Ponzi scheme in history. Over 4 decades, he faked records of annual gains to investors who thought he was investing their funds, when in fact, he was just using new investor capital to pay off older investors.
But the synthetic shorting and naked shorting, which is illegal, market maker can execute naked shorts insofar as they're facilitating a trade. The regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts, and I think they're going to uncover that there were some issues there. But the penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for
it's a fucking
doing
joke.
this.
Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources.
I basically would like to ask the SEC why they didn't act on the morning of January 28th, because I was so scared. I can't tell you how scared I was.
Gee, I wonder
was
why.
So scared. I can't
The guy that pulled the buy button, one of many.
Scared I was.
Well, Thomas, what were you scared about? What does failure look like? You said we came close to breaking. What were you scared of?
I was scared of a domino bankruptcy.
Yes, Garrett, you will be able to transfer AMC shares and any other securities in that sense from your broker to Lit Exchange once we are fully up and running.
I tell you, the rules
And no, Lit Exchange will not charge you anything to do so.
require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly...
And then we pulled the buy button.
Didn't go further, but
And we didn't allow you guys to buy anymore,
So buying
thus
and
preventing
selling those
proper price discovery.
shares would make the market maker $1. But as millions of shares are traded, the profits from the spread add up. In 2020, these brokerages collected almost $2.6 billion in payments for stock and option orders.
These brokers, including Interactive Brokers and Robinhood, that generate revenue from selling the order flow to market makers.
Business has always been done like this on Wall Street for over 100 years.
Our orders compete against each other to get the best prices. But if the order instead is routed to a wholesaler that has agreed to pay for it, the order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
That's payment for order flow.
About commission or zero commission. Zero commission does not mean it's free. It does have some cost inside. Some brokers have payment for order flow.
Disclosure alone, by enhancing the disclosure around payment for order flow, really will address it. United Kingdom, Canada, Australia, all have banned payment for order flow. I know we have different markets, different systems. We even have letters that we've gotten over the years, dating back over the last 20 years, articulating why it's not good for our system. So I really ask staff to consider that, but also to consider it only in the context of the entire market structure.
On January 28th, our daily deposit requirement was 10 times more than on January 25th. As a
Margin
result,
call.
Robinhood Securities imposed temporary trading restrictions on certain securities. Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements.
The decision to restrict trading really was internal to Robinhood. We did not have discussions about that.
Like Gamestop, AMC, all these meme stocks have brought naked short selling really to the forefront of the market's interest. This is something that's going on for a very long time in the small cap market and is very much a problem.
Has your husband ever made a stock purchase or sale based on information he received from you?
No, absolutely not. Okay, thank you.
Insider trading alert.
Those are fully collateralized tokens.
That markets are efficient because of active managers setting the prices of securities.
The order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
You have it right there, folks, directly from Gary Gensler's mouth. When you use payment for order flow brokers that transfer your orders through dark pools to wholesalers, the wholesalers can manipulate shares. You're not getting proper best price execution. You're paying more for commission free than if you just had paid a few pennies up front or a few bucks up front for your order to begin with. You're literally spending more money by pretending that your order is free. The market maker is literally front running your trades through the use of their hedge funds at any opportunity. The Securities Exchange Commission is currently suing and alleging that Virtue Financial did just this for a period of many months and allowed their hedge fund to get all the order information from their retailers and from their investors and all the orders and trades that they did, allowing them to front run those trades, manipulate those trades. This is the epitome of market manipulation at its finest. That is why routing your order automatically through lit exchanges is the best way to go. And doing it in a way in which you have the choice whether or not to route your, or actually whether or not to lend your shares out is imperative. It is absolutely of the utmost importance. And we asked people here on Twitter whether they would be interested in getting away from payment for order flow and using commission-based trades, and we broke fucking Twitter. This thing has almost 500,000 views so far, and it actually stopped and broke with 3 days left still on the 5-day poll, and it broke at 1,798 votes. Of those 1,798 votes, 91.9% of people said yes, they'd be interested in a broker-dealer that does not use payment for order flow as their main source of income and prefers commission-based trading. 3.7% said maybe, and 4.3% said no. So there's overwhelming, over 95% of people would be either for it or may be interested in it, depending on various circumstances. Now, the reason that we use the word payment for order flow as their main source of income is because even lit exchanges and lit markets like the New York Stock Exchange or IEX pay a rebate. This rebate is technically considered a payment for order flow. However, other wholesalers like Citadel and Apex and Virtue, etc., pay significantly more. And that is why Charles Schwab, Robinhood, and IBKR will go to them and let them use their orders and buy their orders, your orders, in order to process in dark pools, because they are able to pay more because they can then front run those orders and make even more on the back end on top of everything else. So you believe it to be commission free. The reality is the Securities Exchange Commission has already cracked down on these brokers for saying that they're commission free, and it's absolutely not true. Nothing in life is free. You are the product, and you get worse purchases and worse sales than if you actually paid a commission. Plain and simple. And as you can see here, we broke the damn poll. So, I wish you peace and wealth, ladies and gentlemen. Go to litexchange.com, litexchange.app. You can get more information directly from there. There's information on myself if you want to know more about myself. And you will get an update later this week with our Founders Program and our wait list that already has thousands and thousands of users already joined and waiting for us to launch our founders program and our brokerage in the coming months in the future. So that being said, I wish you peace and wealth. Have a great day, ladies and gentlemen. Cheers. And thank you guys for your support. Appreciate you as well, Christian. Yes, you will be able to transfer in your shares from other brokerages, and we will not charge you anything for that as well. Yes, Barrington, the halt on AMC was legal today. Go back a little bit in the stream and you will see more about that. It was over